Hey everybody, welcome to Stockradar Stocks in the Move for another week. Today is dated the 16th of May 2024. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, positives this week. Well, we've seen a recovery after a sharp sell-off, new highs in US indices overseas, lots of new highs occurring in our market. That's the second positive, new highs everywhere. We've seen some really good trend moves occurring at the moment. Sandfire, Origin, Orica, Promedicus, Paladin have all started off. The QUB's just broken out. Telex Pharmaceuticals having a great run. So there's plenty of theirs for you to capture. And again, it's a very simple process of buying a new high and following with your stop. And we love those momentum trades. Okay, so just a reminder that we follow all our stocks that we do have on our 160 list. We follow them all in the trading centre from way to go, from entry to exit with stops. Every week it's updated for you to have a look at to see what I'm thinking, to see where we are, which you can follow as well. Okay, now let's go straight to the top 10. And so we've got this week, got a great selection of stocks this week that are all making new highs. Most of them are Origin, Orica, Paladin, PME, which I mentioned before, all these stocks, Telex Pharmaceuticals. You can see a great run there, which is happening there since its breakout above $12. It's now above $15 now. Emerald Resources and GMG, which has been there for a long time, and it just keeps going higher. It's one of those beautiful property stocks. So there's a good rounding off there. Plenty more top 10 ratings at the moment because the market's quite strong, but they're the main ones we're looking at the moment. Stock pick count. We're down one this week. We've been lightening off a little bit as risk went up a little bit, but there's plenty of new high trades coming up. I'm going to go through a couple today, and there will be a couple more. There's plenty more in Stockradar at the moment. Not only just new highs, but there's a few trend reversals occurring as well. Stocks like Amcor starting to move off, so that's quite an interesting opportunity there for the buy and weakness traders. Okay, so let's go to the markets now, and we're going to have a look at this Dow, see what it's done last night. It's just tipped into new high, just tickled it there, so it's right at the new highs there. Again, the Dow Jones, if you want to remember, in 2016 it was about 16,000 points, and in 2023 it is about 40,000 points. So you can work out your own percentage on that. It's been a huge move the last few years, despite all the catastrophes going on in the world, including COVID. The market is back at those highs again. So, and we are as well, pretty well. So it's very interesting how this market works and how they take a lot of these things in their stride. But generally, the market goes up over time, and that's just what it does. Okay, now the S&P is also making new highs. It's just bounced through today. You can see that's clear break there. We've seen good volume on these things. We saw some good selling here for in the correction there, but the buyers have come straight back in and bought this back. So the sheer weight of money is what's moving this market at the moment. And you can see the Nasdaq there really has piled through into its highs. After making an all-time high, it's really piled ahead again. So it's well off on its way. And I thought there was going to be a bit of tech weakness, but the craziness will continue by the look of it. So there you go. That's the US indices. Okay, our market itself will be up today. I don't know how far, whether we get to the highs or not, but we're looking at some sort of percentage gain today. But we've still got to break out of this range. We've broken to new highs. We're still in a range between SR1 and this zone down here, which is currently supporting it. But really we want to see it up through this 7,900 again at some stage. At the moment we're still 77.28, so we're still a way to go. But it's looking okay. It's just a bit of a slower pace in the overseas markets, which is not a bad thing, and we know why. There's a totally different balance there compared to techies and commodities and banks dominance and things like that. So our market's just been a little bit slower off the market. Off the mark. Okay, we'll go to the commodities now, and gold is holding onto its gains nicely. We saw a bit of selling there, didn't really dent the price too much, it's still holding pretty well. Trend is up there. Copper, again, well, it's had a mighty run. The last few weeks it's gone from the hour 420 to 5. Now it's at a stage now where it may break higher and extend this trend, and certainly when I look at this volume and I look at this momentum, it's certainly got every chance of that, but resistance has to be respected, and we're at resistance. It's 1, 2, 3 year resistance. We've got to be a bit careful here. It could retreat. It could also go well through. So at the moment, with the trend in one way, if it was a stock, I would just be lifting my stop and waiting for things to develop there, okay? So copper looks pretty good at the moment, which is nice for some of our copper stocks, including Sandfire. Crude, again, well, it's gone on holidays, whatever it's doing, I really don't know, but it's not doing anything at all that we'd like to see. It's weak, it's in this trading range. This is a level here that's very concerning if it breaks down there. Got a way to go yet, $10, but the sellers are starting to dominate this again, and momentum's pretty neutral, so there's not a lot of hope there for the crude oil traders at the moment. Okay, so that's the overseas market stocks. Okay, let's go to some stocks now. Firstly, I went to Fish and Paykel last week, so I thought we'd update that this week. Just have a little look at it. It's starting to move through that area again. It's a little bit up on where it was last week. Fisher and Paykel, trend intensity +2, still waiting for the signal. +2, if it closes above there this week, we'll get a qualifying rating next week. And it looks like a big trend reversal here, which does eventually target R2, which is up around $34. Of course, we just follow this with our stop. We don't know where it's going to get to, but that's a potential target there. Certainly breaking through this big resistance support area here is a very, very good sign. And we've seen some nice volume and some nice momentum be attached to this move at the moment. So we're pretty happy with the way it looks at the moment, and that will become an entry next week if it closes above its reversal point this week again. Okay, so Fisher and Paykel is one health stock that's starting to move. Okay, now we talked about Sandfire Resources, just talking about trends and momentum. We get a beautiful break above a big resistance level here, and this could be the copper price. It could be lots of stocks that are doing this sort of thing, but this is what they do use generally. When it breaks through here, you get this market imbalance where all of a sudden there's no sellers and there's plenty of buyers, and they've got to push to get stock, and they just push this price higher and higher. And again, copper is going well, so is Sandfire. So we just lift the stock in this instance. This is where our initial stop was. If I just blow this up a little bit for you here, this was the break point. You can see my initial stop was there, 15%, which is always what I risk, and then I'm following this up with my stop loss, and you can see that in the trading centre as to where that stop is at the moment. But trend intensity rating is +10, and it looks fantastic at the moment. This is again the all-time high up here, so we may well be dealing with all-time highs again for Sandfire, which has got to be another bullish step. So copper gets through, Sandfire gets through, we could see another run there, which is quite exciting for us all. Okay, I mentioned to you Amcor before, talking about trend reversals. Something's changed on this stock quite significantly, and we've all of a sudden seen the buyers jump into here. They were not interested here at all sorts of selling here, and then all of a sudden these buyers have pounced on this, and gee whiz, the stock has moved pretty fast. So the sellers have all of a sudden disappeared. So we've got a good trend reversal here for Amcor. The trend intensity rating is +7. So our next resistance is 1850, which is still a long way away, but potentially is quite good. We're above the average. Momentum is turning positive, and volume is starting to expand as well, which is a good sign. So surprise, surprise, Amcor may well be on the move after a fairly lengthy period of 2022, from a fairly lengthy period of down. It's now starting to rally up, which is good. Okay, so that is Amcor and how it looks at the moment. There's a couple of stocks here. I did talk about a couple of stocks looking with potential of new highs at the moment, and AUB Group has promised for quite some time. Its trend intensity rating is +3, so it's ripe and ready to go. We've got some good volume here. We've got momentum turning is positive. It's above the average. We just really need to see this break decisively. The break up here wasn't enough to confirm a break, still under the 1% violation rule, so we're still waiting again to see what happens this week as to whether AUB is going to get through this and make new highs. It's promised a lot, but hasn't delivered. And if we look back here, it's actually made an all-time high here. It's come back and found support. So on a price construction basis, this looks pretty positive that this is held, and now this is challenging. It's just this last piece in the pie, or piece of the jigsaw, getting through that old high and confirming it as a new high, and that's what we want, and we haven't seen that yet from AUB. So keep an eye on it. It may well start to do that. Okay, now the other one is APA Group, which again was sort of a downtrodden stock which yields quite well. It's now finally starting to turn. If we look at this big trading range we've got here, we see APA Group in this big trading range. It came down a long way from $12 to $8, which it has done before, and it's just rotating this way. So we're now down in the bottom of the range, which is a good sign, which is a good thing. We've got volume picking up. Momentum is starting to ease back towards the zero level, meaning selling pressure is dissipating, and we're now starting to get a move through this switch zone, which is usually made up of a downtrend line, the moving average, and a horizontal resistance point. Which is what I like most of all, which is this old high back here. So this area here looks very interesting. Trend intensity rating is still -5, So it's still got momentum, still under zero, which is not a good thing still so far. So it's still in the early stages of turning this one. So just have to wait a little bit to get confirmation. But the signs are all good for what's happening here. This is really looking like quite a good little base here for it to leverage a good move. And again, you would expect this move to take it back to $12 eventually. Okay, now this one here was very fast. I don't know if it's going to happen like that, but it's a good base we've built down here, and $12 will be the target because that's the high of the trading range ultimately. Okay, so that's an interesting one for you to have a look at. We're going to go through Magellan again, only because you just don't throw away these trends, and I presume again we're probably going to be starting to move to new highs. Again, it depends on where we finish tomorrow, Friday, as to if it closes above there. But trends just extend all the time. There's lots of little stocks doing this, like Southern Cross Electrical. Dalrymple Bay, it's just stocks that just keep rallying, keep making new highs, and they just extend their trends way past where you would think. Not that we think matters, but it's just extraordinary how these trends just occur. This high low pattern is a very reliable pattern, and here again we'll be looking to make a new high. Trend intensity rating is +8. It's just slowed a little bit here. Momentum slowed a little bit. Volume slowed a little bit. Everything just has a bit of a foot off the pedal, but it looks like we might be going back up again, and today and tomorrow will be interesting days to see if we can set off this trend again for Magellan. Okay, so that's a couple of interesting stocks for you. Again, another simple trend trade, a very, very simple trend trade. Today's about trading safe, about being very simple in what we do and keeping things really easy to manage. And with a stock like Ventia, which was a new stock, one of those new listings, which was the initial listing here, and then we know that they all usually go into this trading range of contemplation, trying to work out whether they're going to be a good stock or a bad stock, whether it's going to be worthwhile or not. In this instance, with Ventia Services, it broke up here, we've got a little entry here, it rallied, it's come back, it's hit our stop. We've taken a 19% profit in a couple of weeks and a couple of months, and that's fine. And this is a simple trend trade, and that's what I do. I don't try and pick tops or bottoms. I just in it to try and make a little bit of money out of a trend trade. Now, in this instance here, it was just a simple entry, hit the stop, and out it goes. So it's a matter of just doing it. This is a very common trend trade as to how they work. Okay, so that's Ventia Resource, and some of you would have probably followed that one. I think the volume's all squeezed up down here, which you can't really see much, but let's see if I can make some sense of what we've got up here. Okay, so the good buying here, and you can see here the buying propelled the stock higher, but then all of a sudden the sellers really did start to hit it here, but it was really just a very, very quick move of a few weeks here before it stopped. So that's really a simple trend trade, and again this is still positive, but again the stop is the most important thing in this situation here for us to monitor. So that's what Ventia looks like. Trend intensity is -4. Okay, just want to have another look at top now. The banks are always interesting to me. I see lots of people got sell ratings on these banks, and God, don't you love them? They just keep trying to sell these things, and they do go up and down, as we know, and they generally move similarly. They do different things. At the moment, I'm holding 3 banks, but I'm not holding ANZ at the moment because it's been under this big resistance area here, which has concerned me for quite a while. And it's now started to struggle through this area here. It got through it, it's rallied to this point and stopped. Now, I quite like it because there are a couple of things happening here. This is a big resistance area. We've got a very nice little push of buying, which is pushing this stock higher, ANZ. So all we need to do is see it through this level here, break high above here is a high probability new high trade that will send it towards R1. We've got volume being slightly better, especially on this run up here. Slowed up a little bit as the market came back a bit. Momentum has turned positive and it's above the average. So trend intensity is -1 and ripe and ready for this to move. So just talking about the banks really, and this is I have a trading strategy which is trading trends, but also my other portfolio is really an income portfolio for me. And when I look, my banks provide a fairly big part of that. And the reason being is if you look at yield in ANZ. The dividend fully franked is grossed up as 8.4%. Now you put that versus the term deposit rate of 4.75. So we're sort of wondering why these banks are being supported so well. There's pretty obvious reason. And there's risk in the stock price, but not a hell of a lot at the moment. They're fairly stable. So the basic maths tells you why they are most attractive. Banks are very safe, not quite as guaranteed versus term deposit, but they're always well supported. We're lucky to have them and to be able to invest in them. That's why people do, because they give you great fully franked yields, and they're fairly safe. So we have to be careful here not to mix strategies. As I mentioned, now I trade trends, but I'm also going to develop a new portfolio in my portfolio service, which will be a yield-based one, which will be an interesting one. So that's for the future. But why these banks support so well at the moment? Because their yield is so good, and especially fully franked is fantastic. So they all do it. So we should not ignore the attractiveness of the banks and how lucky we are to have them. Okay, so that's the stocks I wanted to go through for you today. There's a couple of interesting stocks there with AUB and APA. Magellan's making a great trend. Ventia did it. Fisher and Paykel may break up. So there's some interesting stuff there for you, and there's loads more on Stockradar. Okay, what's happening at Stockradar? Well, you can subscribe to our free blog if you want to get an idea of what I'm doing. There's heaps of articles on the blog area. You can take a free trial and just look at my service for 2 weeks, see what you think, have a good dig around, ring me, ask me questions, whatever you want to do. And then, of course, there's my main page, the Trading Centre, which monitors all your stocks, and you can also even set up your own portfolio in your own mini trading centre on the site, so you can monitor not only your stocks you are holding, but also ones you might be looking at. And you'll be able to see what their trend intensity ratings are, where their reversal levels are, and stop levels are, all done for you in the Trading Centre. Okay, so just lastly on the trade safe idea, I just wanted to just be pretty clear on this one here. You can see the Ventia trade there, a very simple trade. I try and keep it really as simple as possible as I can. So I have only 2 entries, the trend reversal and the new high, as you know. Very, very easy. One's a buy and weakness trade, and one's the momentum trade, which is the new high. Exiting is the stop. The trailing stop loss is what I do, and I manage it within certain parameters and certain boundaries, certain controls, and that's what gets me out. So I'm always making sure that with using a stop, I can always make sure I can minimise my losses, but I always make sure, like a stock like Ventia, I don't see my profits disappear, because I raise my stop. If it gets hit, I get out. I never lower the stop. I always have a stop. So for Ventia there, I'm neutral and I'm happy, and that's the way it works. So I just try and keep it simple. It's easy, and that's the smart way to do it. Have a clearly focused objective. Don't mix your objectives or you get very confused. Are you trading for growth? Are you trading for income? All sorts of different things. So you need to make sure your stock entries and exits have certain rules that match your objective. Otherwise, you will get confused. Okay, so any good objective must be implemented with discipline, so that you actually take the entries and take the exits, and you'll find things will unfold much better for you if you do it that way. Okay, so that's really all I've got for you today. Interesting market, a lot of fun happening at the moment. Up it goes again. Don't take these chances, these opportunities for granted, because as we know from the last few years ago, it wasn't happening, but now it is. So there are lots of opportunities to make money, and we don't need many stocks to do that, as our 5-stock and 10-stock portfolios are full. If you want to know how to run those, you can come and ask me how my portfolio service works. But that's what I do, have 5-stock and 10-stock portfolios. It's always a bright future with Stockradar, as we only focus on stocks going up and trends. So that's really what I'm trying to do. You don't see me talk about too many stocks that are down the bottom, the Sonic Health and things like that, because they're not doing anything and they're of no interest to me at the moment. They will one day, as they always do. All stocks come back, all good stocks come back. But for the moment, we're just focusing on the ones that we've got at the moment. So watch your trends, heed your stops, stay safe, and I'll see you all next week. Thanks very much.